So with that, a very warm welcome to our March 2025 session. We do have more people still trickling in, which is wonderful. Spencer Educational Foundation, we are a nonprofit organization that supports future leaders of this industry, which is everyone that is in the virtual room with us here today. It's college students pursuing degrees within risk management, insurance, and actuarial science. We have an amazing panel with us here today from SRMC, which is the Society of Risk Management Consultants. Moderating our session today is 2024 Spencer Risk Management Intern, who, by the way, is now working full time at the place where he interned last year, which is such a success story. We absolutely love to hear that. But we have Chirag Malhotra, who is Enterprise Risk Management at CSA. Also dialing in all the way from Canada, we have Joy Gander, Jason Luckett, and Chris Moss as a panelist. So thank you all for being here today. And with that, Chirag, I will hand it over to you.
Thank you so much, Tandika. Hello, everyone. I'm so glad you could make it here today. We have a fantastic panel of experts with us who have a wealth of experience across all aspects of risk management. Uh, a few ground rules. We'll first begin with asking the panelists some general questions, and then in the later half, we can have the audience come in and ask our panels for insight. In the meantime, if you'd like to have any questions, feel free to type them down in the chat. Okay. Without further ado, let's get started. Let's first introduce our amazing panel, starting with Joy. She is the owner of the Gander Consulting Group and has over 30 years of experience in risk management and employee benefits consulting. She's worked with a wide variety of clients, such as nonprofit organizations, petroleum marketers, real estate companies, and even educational institutions. She's also a guest lecturer and former graduate of the University of Wisconsin. So happy to have you here, Joy.
Thank you.
Up next, we have Jason. He is a consulting actuary in the Sigma Actuarial Consulting Group, where he specializes on the quantitative side of risk management. He has a wide variety of expertise in areas such as automobile liability, general liability, medical professional, and even workers' compensation. He was also featured in the Captive Insurance Times as an emerging talent within the captive insurance industry. So thank you for joining today, Jason.
Hey, everybody. Happy to be here.
And finally, we have Chris Moss. Now, Chris is the president of the Compass Risk Services company. He has, again, another 30 years of experience across a broad range of risk services and claims. He's also worked in Chubb & Son and Charles & Taylor, which is a risk consulting firm, prior to starting Compass Risk Services. So thank you so much, Chris. Happy you're here.
Glad to be here. Thanks, everybody, for joining us.
Definitely. So let's kick off the session by giving us a more general introduction to what industry each and everyone is a part of, starting with you, Chris. Given the broad scope of risk services, what are common types of risks that you see companies and businesses face? And if you could tell us a little bit about how you go about implementing the strategies you suggest.
Sure. So that's obviously very broad. So there's certain types of risks that most companies are exposed to, and then there's more specific types of risk that other kinds of companies are exposed to because of what it is that they do, whether they're making a product or they're making a service. So just about everybody is exposed to the AI risks, the cyber risks that have come up, and that is really a good example of something that probably everybody in this room can relate to, and that has evolved over time. 15 years ago, cyber risks were more along the lines of spam and how IT departments dealt with the scourge of spam and teenagers in their parents' basements with a small computer something. But today, it's nation states that are trying to steal secrets and are doing a very good job of it.
Yeah. I don't know if it's just me, but you're okay. So your audio is cutting in and out, Chris.
Yeah.
Yeah.
Why don't we maybe move on to somebody Give me just a minute I'm getting some messages on my screen that there's a problem with my speaker.
Okay,
Perfect.
no worries.
Thanks.
Next, Jason, I wanted to ask so actuarial science is one which is the quantitative side of risk management. I was interested to know what your day-to-day looks like and how do you use some of the data and mathematical models to assess and quantify the risks for your clients?
Yeah, of course. So there's some very, I would say, industry-wide basic actuarial methodologies that my firm uses that pretty much any actuary you could meet will use. And typically what we'll do is we'll analyze a client's historical data, and then we will apply development factors to that based on historical patterns of how that data may grow over time. So they may have paid losses for a 12-month period. We would analyze how do we expect those paid losses to increase, over the next 12 months, over the next 24 months, or even to the ultimate value of what they're going to pay out over that grouping of claims. And so there's some very, standard basic methodologies that all actuaries will use. The other key thing is, what is the end goal of our client? The two, I would say, primary things that we're doing for clients is helping them estimate outstanding liabilities for any liability related to their claims insurance. So if they have a large deductible program, and so they're responsible for paying the deductible on any claim that happens, sometimes that can create a large liability for them they need to include on their financial statements at the end of the year. So as we get to the year end and as we get into the first months of the new year, it's typically a pretty busy time for us because a lot of our clients are looking for us to help them estimate what is that outstanding liability that they need to list on their financial statements. Another big key kind of idea that we help clients with sometimes is setting a budget for what they expect in new losses for an upcoming year. So that's another thing that we'll often help people with as they, either prepare for the new year or get towards the end of their fiscal year, which is kind of their internal accounting year. We will look at their historical data. We'll look at their exposures, how their exposures in the new year may be changing, things like that. And we'll come up with a loss projection that will allow them to kind of craft their budget for the upcoming year of, hey, how much is our expenses related to these outstanding claim liabilities that we're going to experience over the next 12 months? How much is that going to cost us? And so it's all about them trying to manage their financial results and make sure there's no big surprises as they get down the line and as they actually start paying on some of these claims.
No, definitely. That's a really important task for companies because given the changing dynamics of today's world, having an estimate about how things will be in the future is essential to crafting a good financial strategy for the company. So we really appreciate the work that you do. Moving on to Joy. So you've worked with a diverse range of clients, such as nonprofits to other corporations. What are the key core tasks been like on a day-to-day basis when you've been working with all of these different clients?
Yeah, thank you for that question, and good afternoon, everybody. So, as Chris mentioned earlier, that's it's really a broad question, and the reason it's broad is because what I do day to day is different. Every day when I either open up my laptop or I go into the office, I have different things that I need to do for different clients. So just to give you a little bit of context, I work with organizations of all sizes, companies that have maybe 5 people on staff, and the other extreme as well, up to, let's say, 9 billion in sales. So I have a wide variety of clients, and my clients have various levels of knowledge of risk management and insurance. So with that in mind, usually I'm engaged to either conduct a project or act as their outsourced risk manager, meaning they have people internally that manage, the risk management program, but they need somebody else for the more technical aspects of risk management and risk financing and risk control. So for example, what do I do on a daily basis? Well, today, I've been asked to draft an additional insured endorsement for a client, and my first task is to review the contract, where in this particular case, the contractor apparently And the client has agreed to add the contractor as an additional insured. So I have to read the contract first to make sure that when I draft the additional insured endorsement, the scope of the coverage provided meets what's in the contract. And if it's already been signed, it's a done deal. I may have some insight for the client, like, oh, in the future, you might want to consider narrowing the scope of the coverage that you afford. Or I want to make sure that they have the right kind of other additional insured endorsements that the contractor and the subcontractors are carrying, so that my client is provided a lot of protection from an upstream basis. The other thing that I'm doing today is I'm reviewing statement of values for a property management, property development company, because they use a certain formula to come up with their replacement cost values, and the insurance industry has their methods and programs as well. And so I'm helping both parties understand where each of them are coming from and bridging any sort of, I'll say, gap in understanding in the methodology. Another thing that I'm doing today is I'm developing ideas for an insurance trust that has accumulated money over the last 40 years, and I am charged with developing program ideas for the participants in that trust so that the trust can use the money that they have and reimburse the participants for their risk management or risk control efforts. So honestly, what I do on a daily basis, the only core tasks are checking my email and responding to those that are most urgent and, opening up my laptop. Those are the core. And then from there, it really varies.
That's an excellent summary of all of the different tasks that you'd have to do as a risk manager or a risk consultant. Just going back to that question. So when you said that you have to create an idea for an insurance trust, what did you specifically mean by that?
Sure. So this particular insurance trust consists of public school districts. And the program, again, was set up about 40 years ago. And the gist of the program when it was first developed was to provide a source of casualty liability insurance for these public schools. That was at a time when it was challenging for public entities to get coverage. So over time, they endorsed specific insurance companies who provided coverage or accessibility to the coverage, and the members could purchase that coverage. And through that relationship, the trust earned what we would call a license fee. Some people would call an endorsement fee, which means that the insurance company that has been endorsed can use the trust name when selling their products. So again, the trust has accumulated some funds, and they're looking at it and saying, okay, what can we do with this to further support our members to decrease the possibility of loss or mitigate the possibility of loss, or provide educational opportunities. So those are the sorts of things the ideas that I have to come up with.
That's really interesting. Thank you for sharing that with us.
Durag, can I dovetail on that a little bit?
I was about to go to you.
Thanks. So first, I wanted to make sure you could hear me.
Yes.
And I think that what Joy was saying is a good example, because I had just way too many resources that were being used on my laptop. We get up in the morning and we start working for clients and we start doing things, and we're moving from one application to the other. I have 6 different email accounts because I have several clients that want me to work inside their systems, right? Which protects me and them. So I'm in favor of that. But Joy talked about a lot of different things that she does every day, and some things that may sound just crazy to some folks. We work for clients large and small, global. I'm working on things globally. And I don't want any of you that are listening to all this to be overwhelmed by that. I think there's a whole big world out there of insurance and risk. There's all kinds of companies and organizations that every organization, every company, every high net worth individuals that all face risk exposures that they can buy insurance for, which is just one way to mitigate risk. Joy and I and Jason, we don't sell insurance. We help our clients manage their insurance programs, but we also help them manage risk very generally. And there are so many opportunities out there for folks in different areas, whether you specialize in a particular line of insurance or you begin to become more of a generalist, which is what we are. We're more generalists and helping with all kinds of different types of insurance. And maybe sometimes some fairly unique ways to manage risk by Jason works with captive insurance a lot and mutual insurers that are out there.
Right, right. Given all of these different tasks that you do on a day-to-day basis, we as students would think, what are the key skills that you would expect or would set someone up for success in the risk management and insurance industry? Like, given that there are so many different tasks that you have to do, like, what are the core skill sets that it really boils down to? If you could share some insights on that, Chris.
I'll say curiosity. I think it's peeling back the onion, right? Sometimes our clients don't know what they don't know, or they don't really know the right question to ask. A lot of times our clients are coming to us and they're saying, well, I have a customer who wants me to do X. So how do I solve for X? How do I get across the board? How do I cross this hurdle? And how do I get this one thing done? And the answer to that is sometimes I don't know that you want to do that because that's going to expose you to some risk. So it's about curiosity, peeling. Why are you doing this? What are we doing here? And it's just about being thoughtful and sometimes being diplomatic because we're working with clients who don't know a lot about insurance and we don't want to make them feel dumb. So we have to be diplomats a lot. So curiosity, um, obviously your knowledge about insurance. You have to understand how insurance works, and you have to know what insurance doesn't do, right? There's a difference between, knowing the limitations of insurance besides the obvious, and then not understanding that insurance may not be the best way to treat a risk. So just having that arsenal of information.
That's pretty interesting. So, if I could summarize it, it would be having the knowledge to be generally as a curious person and also have tact when handling or meeting with clients who may or may not be as familiar with the industry. Okay, that's pretty interesting. Um, so that is more of the risk management side. Jason, I was curious to know when it comes to actuarial consulting, is it uh, does it flow in the similar way, or are there some more niche skills that you're expecting, such as data modeling or data analytics? Would be curious to know more.
Yeah, so I think, it would be unfair of me to say with actuarial analytics that the math part of it is not extremely important. I really don't think the math that we're doing 90% of the time is all that complicated. I think it's a lot of more like algebra type arithmetic. But if you're the kind of person who says, I'm not a math person, then I would say, being an actuary is probably not the right choice for yourself within the insurance industry. And that's totally fine. That's totally fine. But I would say equally as important, as that math piece is, I would just say the communication piece, and especially so on the consulting side for actuarial type work. And the reason I say it's so important is that, you know, being able to do all the math, being able to do this complex stuff or understand the way that the data is trending is really important, is a big part of it. But if you can't effectively communicate that in some of these technical kind of aspects of what the math is telling us to someone who may not be a math person, that they may be someone who's more of a risk manager, or they may be someone more in finance, which is mathematics, but it's not exactly the same as actuarial mathematics. So if you can't explain that information or share that information, share the results in a way that they can make meaningful decisions off of that, then you're not really helping them all that much. I mean, it's like Chris was saying, you kind of have to have, some almost tact, like you said, or diplomatic strategies in the way that you're explaining these things. Now, I could give someone a report that's 50 pages of exhibits, and I could really get in depth on some of the calculations. But I've got to know my audience and say, hey, is this a client who cares or who's going to get value out of that, or is this a client that really just wants the high level results? And it's not always the same. I mean, we have clients who take development factors that we've come up with in our reports, and they try to extrapolate those to say, okay, Jason's only doing a report for us once every year, but in between his reports, we want to try to get an idea of what is his report saying should happen, over the next couple months before we get to next year. And so they might be like, hey, we really want to understand those development factors and how we can take those and extrapolate them over this 12-month period so we can kind of track our progress. And then there might be some clients who just say, hey, Jason, I just want you to tell me, what is your best estimate? What is your range of estimates? Is there something within that range that I can book for a liability that my auditors are going to be comfortable with and that they're not going to give me a headache and have a bunch of questions for? So to me, that communication standpoint is so critical for an actuary, and something that one of my college professors used to say is that the most successful actuaries are the ones that are good enough at the math but are great at the communication. I mean, if you're great at the math, you can make a good career as an actuary. But if you really want to, kind of move up the ladder and be as successful as you possibly could, you've got to have that communication side.
That's pretty interesting and neatly ties into what Chris said around diplomatic and communication side. But becoming an actuary is still quite an analytical process. So for someone starting out in the field, are there any courses or experiences that they should try to get in right at the start that would really help lay the groundwork for where they would like to be in the actuarial industry moving forward?
Yeah, most definitely. And so the important thing to kind of know about the actuarial career track is that to go to a company to give them for example, I was talking about they might have to book an end of the year liability on their financial statements. So to give them that liability, to have them book that, they may need a credentialed actuary to be the one who gives them that number. And so a credentialed actuary is someone who's gone through the credentialing process with one of the actuarial societies and has obtained a actuarial credential. And so there's kind of two main societies in the U.S. The one is the Casualty Actuarial Society. It's the CAS, and they're for all property and casualty risks in the U.S. And so that's the side that Sigma's on. That's the side that I'm on. The other side is the Society of Actuaries. It's called the SOA, and they do all life and health type risks. And so there's kind of a split between property and casualty actuary work, life and health actuary work. And so they each have a path of exams that you have to take to achieve your credential. So the first thing I would tell anyone who's kind of looking into actuarial is just, kind of look online, look at the CAS's website, look at the SOA's website, get yourself an idea of what it means to be a credentialed actuary. And that's not to say that you can't do actuarial work without a credential. But if you want to, pursue actuarial work as far as you can, if you want to be, a self-practicing actuary, you're going to need your, credentials completed. Now the credentialing process is a long and complicated process. So I would, certainly tell people, hey, don't look at it and just say, well, hey, there's no way I'm going to do, 10 exams. That's just not going to happen. You only have to do it one step at a time. And just because you start it doesn't mean you have to follow all the way through and end it. Who knows where your life and your career can take you. But I would certainly say anyone considering actuarial science, look into the exams, get an idea of what's even on the exams. Why do they matter? Why are they important? What does it look like to study for an exam and to take an exam? What is the cost? Is it something that makes sense for you? And then I would also say that a lot of universities, including my alma mater, Middle Tennessee State University, they'll have either undergraduate or graduate programs with actuarial science majors or maybe kind of concentrations. And a lot of times what those programs will do is they'll have classes kind of linked directly to the material for the first couple of exams. And so when I was going to school, I ended up taking different classes related to the first 3 exams that I ended up taking as I, was going through my credentialing process. And so if it's something that you're serious in, but you're also, like, hey, I'm working and, I could just pick up and just take the exams on my own, but I'm not quite so sure. I need a little bit more structure around it. There's a lot of universities that have really strong programs that will kind of help you get your foot in the door with the exams, with the, just the career in general, and then you can kind of pick up from there.
Thank you for that really detailed response, Jason. I have a few more questions, but I'll probably get back to them a little later.
Sure.
Coming to you, Joy. So far we've discussed what are the skills necessary for us as students to break into the space. Uh, now that now let's assume we get them, what advice would you have for us to make those first steps? As in, are there any internships that we should target? Any particular companies, roles? Just just trying to understand where we can set the bar for us to climb over, if that makes sense.
Well, I guess from a consultant's perspective, my first recommendation is do something else first. Like, for example, Chris mentioned that he has a claims background. I started in underwriting. I know other consultants that started in sales. And the reason that I suggest doing something else first, there's a couple of reasons. Number one, knowing how the industry works and actually being in the industry in whatever capacity, actuary, underwriting, and claims, is really important and very helpful to get a very good sense of how the industry works. And during that time period, if you're going to, let's say, go and become a fellow of an actuarial group, or you're going to get your CPCU, or you're going to get your ARM, the insurance industry is very good at financing and paying for those courses and for you to take those exams. Might as well do it while somebody else is paying for it, right? As an extension of that, those credentials will give you credibility. So when I see somebody who's a fellow, I know that they've been through hell and back taking those exams. And that speaks to a person's, abilities and their commitment. When I see somebody who's a CPCU, I know what that's like. I also know that used to be a 10 exam curriculum. We'd sit there and, we'd write in our little blue books. It's different now. But again, it speaks to, the commitment, and it really does provide really good foundational information. I mean, there's so much out there that everybody can be bombarded with in terms of learning and knowledge and resources, but getting that very basic foundation of knowledge is really good. Now, the other reason you should do something else first is because it gives you more credibility when you become a consultant. Now, that's my experience. I'm sure there's others that might have graduated, with a BBA or with a master's and went straight into consulting. That's certainly possible. But I can tell you that foundational information has come in so handy over the years for me. So when my client hears that the underwriter won't do this, fill in the blank, or the underwriter will only do that, fill in the blank, I'm able to say, look, I was an underwriter. If that is what you're saying, then show me, tell me, give me your policy and procedure as to why this is necessary or why this is important. You will run into, if you choose to go, you're going to run into this regardless. You will run into people that say, the sky is blue. And my message to you would be, trust but verify. Make sure the sky is blue. And so again, that foundational knowledge, doing something first, gives you that right to say, to question, and this goes to what Chris was talking about, curiosity. Question why somebody is saying the sky is blue, or why does the loss development factor have to be X? Jason just underscored, like, the math is important, but being able to ask that question, understand the answer, and then relaying it to your client in a manner in which they understand it is key. So again, do something else first, and then decide if you want to be a consultant.
That makes a lot of sense. Just asking for another follow-up and a short one because we have so many questions planned for our audience. Uh, so you suggest that we first get into the industry, either working as underwriting, sales, or claims, and then pivot to the consulting side. Would you advise us to bounce around between underwriting, sales, and claims, or would you prefer that we stick to one lane, get really good at it before jumping to the consulting or the independent?
Yeah, I would say it's going to vary by person. You know, I did different kinds of underwriting. I was in personal lines, and then I did long haul trucking underwriting. Like those two things couldn't be much, any more different. But in the long haul trucking arena, I placed reinsurance, facultative reinsurance, which I never would have done as a personal lines underwriter. So whether or not you stick in a lane, if you will, or you branch out into other areas, it's really going to depend on what you enjoy doing. So
Okay.
that's what I would
You
say.
you can achieve diversity
Yeah.
in liability, but different types of liability because there's different markets, right? You can be in construction, you could be in energy, transportation, you can be in those different industries. So if you're going to get good at property or casualty or management lines like D&O, or if you're going to be an actuary and you're going to work in that space, just do different things even within that space to be really good at casualty underwriting across different industries.
That makes a lot of sense. Thank you. Before I move to the next one, I wanted to ask if the students had any questions. Feel free to unmute, open your video if you'd like to, and ask your questions.
Is that all right if I go first?
Sure thing.
Okay, awesome. I just want to ask a question about how do you, like, with the knowledge and experience that you guys have had throughout your careers from school, from work, from consulting and stuff, how do you handle the difference between like your own judgment and experience and what like the kind of the models tell you or the stats tell you? Is that kind of something that you gain through like your experience or mistakes or you see other people um as failures or whatever? I don't want to say that, but is that just a knowledge that you just learn throughout your career, or is there stepping stones that you kind of take without those cases and handling those difference between your own judgment and then what the data tells you?
It's all of the above. It's your life experience, right? It's everything. It's the knowledge that you learned in college, not just from your insurance courses, but from your other classes as well that come into play in the different things that you do and you see. It's the experiences from working with different people, different clients, different industries, different sets of facts, it's just you see all kinds of different things. But you also, this is going to blow your mind. You're never going to know it all. We're always learning. I run into something at least once a month that I've never seen before.
That's an excellent question. Does anyone else have any others?
Yeah, I'd be happy to add. So I would say, similar to Chris, it's like over time dealing with different clients, and a lot of times we'll deal with auditors for different clients, and those auditors may have different questions for us. They'll question parts of our report, or they'll question different assumptions and things like that. And so over that time, you kind of see, hey, this is something that caught someone's eye. As I'm doing a report next time, let me think ahead on that. And so it's kind of a skill of its own that you start to develop. Is you're reviewing your own work, or you're reviewing a coworker's work, and you'd say, what could an outside party look at this, and what could they question? And if they could question that, do we have a good answer for it? If we don't have a good answer for it, okay, maybe we need to internally discuss and change something. But yeah, that's almost a skill in of itself, is to get an idea of where the weaknesses of this work that we're doing, or where do we not feel so confident. And sometimes you can find great solutions to that, and sometimes you can't, and you just make sure that you feel like you appropriately kind of caveat your work or make the client aware of that, so that they know that that's a clear weakness, or a clear thing that's, hey, this is still something under consideration, or this is something that may need a little more work. There's not any one right way to do it. But as long as you have, a reasonable kind of process of making sure everything you've done is fair and accurate, or is, as accurate as it can be, and you can back it up, then in my experience, you don't really have to worry about ever run into any, really troubling questions. Would be a fair way to say it, I think.
We get asked a lot of hypothetical questions and asked to look into our crystal ball to predict the future.
I'm going to springboard off of what Jason said, and put it in slightly a different context. My clients, when they hire me, they do it for any number of reasons. It could be a CFO that says, look, I'm in charge of this and I want to make sure I haven't missed anything. Or we're not really happy with our broker and we want you to help us understand what our broker is supposed to be doing. Regardless of the reason for which we're engaged, my biggest goal and objective is to make sure that my client has enough information to make the best business decision possible. And that decision can be defended. They can stand up in front of the board of directors and they can say, we decided to do X, Y, and Z, and we decided to do that because of A, B, and C. So that ties in and dovetails with what Jason said, is you have to be looking for holes in the proposition, in the solution that somebody might be offering. And it's okay. I mean, we all, Chris and Jason and I, have all been in that situation where the idea sounds great, but then we have to step, and it could be our idea, but we have to step back and go, okay, what could go wrong? Because that's what my goal is. That's what I'm charged with, is making sure that my client is making the best and most informed decision and can back it up.
Okay. That makes a lot of sense. And okay, yeah. So does anyone have any other question that they'd like to ask? Feel free to put them in the chat or use the raise hand feature.
I think Emmanuel might have a question. Do you have a question, Emmanuel?
Yeah, I have a
Go
question.
ahead.
Yeah, thank you very much. So this is actually insightful. Yeah. So my question is directly to Chris. Yeah, so while he was talking about curiosity and a part of the skill and that one should possess, he was talking about insurance is not the only way to treat risks. Actually, so in my knowledge, I thought, okay, while one talk about risks, okay, the break about the knowledge of risk transfer. So that's where insurance comes in place. So all my knowledge was, insurance was the way to treat risks. But hearing this, I will need more talk on it. Thank you very much.
You're
Sure. So
welcome.
a lot of people, as consultants, because we don't sell insurance, right? Our clients rely on insurance when something goes boom. When something bad happens, you want your insurance to work. And that's what we spend a lot of our time doing. But insurance is a band-aid. The thing already went boom, right? What's better than having insurance to pay for it is preventing the thing from going boom in the first place, whether it's a cyber loss, a building collapse, an explosion, or an employment-related matter. It's to have processes and procedures in place to help to prevent those losses in the first place. So it's block and tackling basic business operations. And so we're individually not necessarily experts in those areas. It's about making sure our clients do have the correct experts to do that, having the right safety experts, environmental experts, HR experts, making sure that they have the right processes, financial processes and tools in place to prevent financial loss and crime, and all of those things. So it's all of that. Making sure you're as bulletproof as you can be from your processes and procedures, your hiring practices, your business practices. Too many times companies are trying to put risk on a supplier, right? We're going to transfer all the risk to the supplier, right? So if I'm working for that supplier, I want to help them push back in the right way so that they're not taking too much risk.
Great question. Great answer. I love how Emmanuel was like, we'll need to spend more time, Chris. We need to spend more time chatting. And
Happy
Emmanuel,
to do that.
right. Remind us where you're dialing in from, Emmanuel, if you're able to tell us where, or just type it in the chat box and say hi. Let us know which country you're dialing in from. Awesome. Back to you, Chirag.
One of the points in which you said previously answered the question is it's important to have good hiring practices in place. That neatly leads me to my next question, which is when it comes to a new graduate or someone with early experience, what advice would you give to someone to prepare for those interviews? Let's start with you, Chris.
I think it's just demonstrating curiosity, demonstrating as much as you can a desire to learn and a desire to do things. I think that it's great to have an educational background, a very good one. And I'm just looking at everybody who introduced themselves and said where they're from and where they're going to school. There's some great schools, and there's a couple of people at Georgia State. Georgia State has such a great reputation. I promise you that that reputation will help. But it's demonstrating curiosity, knowledge, and a desire to learn and a desire to do. If and look, if you're a there's a place for everybody. I promise you. What your skill sets are, be true to yourself. If you are a bookish person who wants to sit behind a desk and look at contracts or look at insurance policies all day long, there is definitely a place for you. So be true to yourself. Talk about what interests you and what motivates you, and you will get someone's attention.
Awesome. That's pretty insightful. Jason, would you like to spend some time and answer about the interview side when it comes to the actuarial consulting?
Yeah. So I definitely agree with Chris. Another direction I would probably take it is almost more of like just like a professionalism. Something that I thought was really valuable when I was in college is I did an internship with an insurance company, and it wasn't actuarial. It was actually just answering phones and talking to policyholders as they were going through the renewal process. So it was, not at all what I do now, but it was in a big corporation, a big company, hundreds of employees. I was getting dressed up every day. I was going into the office, and it was just a really good learning experience. And now at my current job with Sigma, we're a much smaller consulting firm. We're much more laid back about our hours or our dress code or things like that. But I think having that kind of professional experience was really important. And so my whole, I guess, point on this is that when you interview with someone, some things that you might overlook, like, being a couple minutes early or dressing nice or, being prepared, ready to talk about things for yourself, having questions, you're ready to ask them things, show that you've actually looked into the company or that you've looked into, the role, things like that is, a big part of the battle, is because the way you present yourself kind of is a reflection of your own character sometimes. And showing someone that, hey, there's a really strong character behind this interview. It's not just a resume with some stats on it, or it's not just some response. I think that is like extremely important, and it's something that throughout your career, will kind of reflect on how you're doing, on who you are.
Interesting.
And we do have another question that just came in, Chirag. So in the chat box, Megan Whitney has a question. Megan, I don't know if you're in a space where you could unmute yourself and ask your question. And if not, that's okay. I'll read your question. But just wanted to give you that opportunity.
Okay, let's see. Sure thing. Hi.
Hi.
I am not a student, but calling in from
That's okay.
my lunch break. I was just curious to the panel, kind of the various different areas within consulting that you're all working in. Can you speak a little bit to the sales aspect of consulting, how you're acquiring clients? Are you actively doing that by the time a project gets to you? Has the, sale already been made? Just curious if you guys can speak a little bit to that.
Well, Joy and I run our own companies. So yeah, we have to sell. We're selling all the time. But I don't have a salesperson yet. I have about 15 people in my organizations, but we don't have a salesperson. So most of our clients come to us from referrals, or they come to us from sort of repeat business. Relationships matter. I cannot emphasize that enough. As you're coming up and you're meeting people, you're working with people, be a diplomat. Don't burn bridges. You're going to run into people that you don't like. You're going to run into people that don't like you. Don't burn bridges. You never know when you're going to see those people again. It's really a pretty small industry. Referrals, our business depends on referrals. Um, Yesterday, on the way to this conference, I stopped by in Houston. I was invited to come talk to a company because the CFO just joined, and I know the CFO. He was a prior client at a different company, and he's now joined a different company. He's moved on, and he doesn't like the risk manager there, and so it looks like we're about to get a new client because of that just yesterday. So that's how we get business.
Yeah, and I'd be
I
happy
would,
to speak from the Sigma side. And so we're very similar, as Chris was saying. We'll have people that we've worked with at various points who might move on and who might be familiar with us. A lot of times we might have relationships with different insurance brokers. And so they may have clients, those clients may have an actuarial need. The insurance broker may recommend Sigma to do that work for them. And so, being able to demonstrate over a period of time with various clients that we're doing quality work, that we're good with our communication, all these things makes an impression on those brokers. And so when they have a client who has that need, I'm sure we're not the only actuary that broker knows who has worked with. But our reputation relative to that broker makes them feel comfortable in recommending us, because again, they don't want to recommend someone to a client who ends up being kind of a poor service provider to that client, and then it reflects badly on themselves. And so, whether it's because they have an experience with me specifically, or whether it's from someone else with Sigma, it's a big deal. And like Chris said, the relationships are really important. And then the other thing I was going to say with Sigma is we do quite often go to different conferences throughout the year. It'll be either risk management conferences or captive insurance conferences. And those are kind of twofold. I mean, we are occasionally meeting prospects and people who might be interested in our services. But a lot of times we're also meeting current clients, or we're meeting, brokers who we work with. It's just, kind of establishing more of a personal relationship in addition to the business and online relationship. And we feel like that's a really key part of, just developing that relationship, so that it's more than just, an occasional email back and forth to each other.
yeah, from my perspective, I don't sell anymore. Like what Chris said is that it's all word of mouth and referral, which is really the best kind of marketing, if you will, that a consulting firm could ask for. And I'm going to say, earn that reputation by doing really good work, being thorough, and not burning the bridges as much as you may want to. just don't try not to do that, because you just never know who else is going to learn about what a great job you did, or the other side of the coin, which might not be quite as flattering. But in my career, I have my clients, the client that I've worked with the longest is 35 years, and I inherited clients from prior consultants. So I was very fortunate that they have stayed with me over time, and they're the ones that use me as the outsourced risk management consultant. They use me when they need me. But these personal relationships that you develop with your coworkers and with clients is so critical, because while Jason and Chris and we know our stuff technically, at the end of the day, the client wants to work with somebody they like. Like literally, they like you, they like your style. And it's not always going to be a match or a fit, but that's the way this industry, this consulting industry works, is word of mouth, referrals, and having that good fit personality wise with the client.
Thank you. I appreciate that.
Can we stop and give a shout out to Dr. Lucas and the class at Savannah State University who's tuned in today?
Woo! Welcome, welcome.
Glad you could join us.
Yeah, so I think we've got enough time for maybe one more question. I did see a hand that went up, but then it went back down again. So I don't know if you're still in a space where you'd like to ask your question. If so, please feel free to unmute yourself. How Wei Lu? Yes, go ahead.
Yeah. Hi, everyone. Yeah, I wasn't sure about the question at first because I think Jason kind of answered the question I had in mind, but I guess I'll clarify just in case. So I had a few actuarial work terms, but it was more like on say for the bigger companies like in personal lines like say auto or property like stuff. So it's more on the back lines where we don't really do any consulting. It's more just like looking at the data and like the models and then sending in the reports. So I was kind of curious about like the difference between as being a consultant, is it more of a case by case where you're looking at say, okay, so client A and then client B and C, so you have to do all the modeling and the analysis like for each client and where you're doing the back lines of the analysis and also like the front lines of like communicating it with them as well in a let's say non-actuarial way. So is it like doing both and in a case by case like basis as opposed to what I experienced was more like say if it's personal lines, then we're just dealing with like say auto, then like we're just looking at data in that sense, and it's not a case by case kind of like a situation.
Yeah, yeah, no, I think you're definitely on the right track. So I mean, what we're doing at Sigma is we have clients who, we do one coverage for, it might be workers' comp only. We have clients who we do a lot of coverage for. It could be worker comp, auto, GL. We have clients who have property. We have clients who have medical professional liability, all kinds of different stuff. And a lot of times there's different structures around those. One client might have a $250K deductible. I have an auto client who has a $20 million deductible. So the different clients have very different structures. And so, yeah, it's almost impossible to do it a way a commercial, carrier actuary might do, where you can just collapse everything together and look at it all together. So for each client, we're doing a very kind of specialized report just for them based on their unique program and structure. But yeah, we're handling the process all the way from getting a loss run, from reviewing it, summarizing it, making sure it has all the information we need, to updating a model. We typically, as we do projects for clients, we have kind of a basic template that we use, but it ends up getting very kind of customizable depending on the client structure and need and things like that. So each client will have a model for that client. We'll put together that whole model. We'll communicate, on the front end as we're reviewing the data. We'll communicate on the back end as we're coming up with the draft. A lot of times we'll have a big kind of final call to review the results, things like that. We end up providing a full report that has like a whole kind of textual narrative describing all the exhibits, discussing all the assumptions, putting in all the important, kind of statements and caveats. And as far as my role on those projects, it can kind of vary project to project. When I started at Sigma, which was around like 10 years ago, I started as an actuarial analyst. And so I was really just kind of summarizing data, maybe inputting into the model, making sure that, the model had all the latest things incorporated, was doing everything that we needed. As I've, developed into a consultant, and then now I've gotten my credential, and so I'm an actuary. I still do that occasionally. There's still projects that I'll do all the data on. More often though, I would say I'm kind of managing someone who's doing the data, and I'm doing the main communication with the client. So I'm, kind of checking in. They send us the data. I'm checking on and say, hey, we got the data. We have everything we need, or we're still missing a few items. Checking in of hey, we've got everything we need. We're a couple of days away from a draft, or coordinating things like that. And so, as funny as it is, I was saying communication is so important earlier. I would say the updating the model, the doing the analytics, that's probably 40 to 50% of the job. And then I would say there's easily another 30 to 40% that's, checking in with clients, that's emailing clients, that's keeping them up to date. And it kind of ties back to the whole, your reputation thing. Because I find it very, critical for me in my career is, just keeping the client up to date on where things are. It's like, hey, I might be, a little bit behind, but if I reach out to the client, a week early and tell them, hey, it's not looking like we're going to have it for you next Monday. It's looking more like we're going to have it next Friday. A lot of times that's fine. And if that's not fine, the client will tell me. And that gives me, 4 or 5 days to figure out the workflow issues, as opposed to I reach out to them Friday and say, hey, I was supposed to have this thing for you Monday. Actually, I'm not going to have it to you next Friday. But then they say, we still need it Monday. So I'm like, okay, that's going to be my weekend. Great. So I feel like some of those things become really important in the consulting field that you might not deal with more at a commercial carrier where you're not interacting with clients in that way.
For sure. Thank you so much.
Yeah.
Awesome, awesome. And we do have one more question in the chat box. We are a little bit over time, so completely understand if anyone needs to, drop off. I do see a question from Vinita in the chat box. Are you in a space, Vinita, are you in a place where you can unmute yourself and ask your question? Just want to give you that opportunity before we read your question.
Hi, everyone. I can't turn on video based on where I am, but hopefully you can hear me with audio. With that, thank you all to the panelists and, Spencer and ORIMS for organizing this. While not a career entrant, I've certainly still appreciated the advice you've given is so accessible at every stage of your career. So thank you. With that, from a RIMS perspective, often the criticism is that insurance as a risk transfer vehicle or mechanism is what we're focused on. So my question was really surrounding how much of your independent or small mid-sized company practice engages with the ERM function. So dealing with the risk control aspect of advising your clients outside of just using insurance as a alternative risk transfer mechanism.
I would say,
go ahead.
yeah, if there's any, we do work in that space, not as much as we would like to. I think ERM is an incredible tool. I think companies should be using it, but it's a big undertaking for small and even a lot of medium-sized organizations. So it tends to be larger organizations in the US that adopt it. It is much more frequently used in the UK and in Europe, in other parts of the world. And in some places it's kind of mandated. The clients that we have worked with on it have either been kind of curious about it and kind of did a start on it and didn't really do much with it, or it's been kind of imposed on them. One was imposed on by a property insurer and basically told them, do this in 12 months or we're going to jack your insurance rates up 50%. So they had a built-in budget to do that. And we helped them to implement ERM and develop risk registers. For organizations that have an ERM specialist or function, they're one of our biggest allies. Right. We're because they know so much. They know about the risks that are happening in the organization. They know about what mitigations are already in place, and they're already looking out for future mitigations. They maybe are trying to use the ERM function in their risk registers and oh yeah, if we did this, this would bring our risk down in this area. And they're beginning to budget and plan for new things to do. So these are things that we can then come back to the underwriters with when we're doing renewals, for example, that we have this program in place. These are the things that we're trying to implement. Here's the schedule when we plan to do it by.
Thank you, Chris, Jason, Joy, Jason, anything to add to that?
Yeah, I would say that, first of all, while we in this webinar probably intuitively know what we think enterprise risk management is, my first question to a client that says, I want you to help me with enterprise risk management, my question to them is, how do you define enterprise risk management? Because it's been a hot topic for quite a while, but you need to have that common starting point, which maybe sounds a little elementary, but it gets to that communication. Like you want to make sure that you and your client are on the same wavelength. So let's say that they are on the same wavelength. Then you start having a conversation about, tell me why you want to look into this. What have you done so far? Chris made reference to the differences in clients, where they're at in their ERM efforts. And some are very sophisticated and others are just starting out. So we have a colleague that worked on some software for ERM that develops the risk registers. And if I don't do that, I don't get into the weeds with the ERM to that degree, but I can help the client decide the path, if you will, towards ERM And then I'll call my colleague and say, okay, I have a client for you. That's one of the big benefits of our professional group is that we know that there are people within the SRMC organization that are specialists in a certain area. And it's okay to not know everything. In fact, your clients will appreciate the fact that you say, look, I don't know, but I can help find somebody that does know and can help you. And you're not gonna lose a client. Your client will very much appreciate you saying, I don't know, but I will help you. They're not gonna leave you. They might go somewhere else for ERM, but getting back to the heart of your question, I consider insurance to be the safety net for my clients. Everything they do before it goes boom, as Chris said earlier, is really what's important. We want to give our clients the most control over potential risks and losses as much as possible. And that starts with starting before the loss ever happens.
Yeah, and I'd be happy to just chime in from Sigma side. And so something we'll talk to clients a lot about is their total cost of risk. And so total cost of risk is it's going to be a lot of things. It's going to be their premium that they're paying for, some kind of coverage. It's going to be their deductible losses that they're retaining. It could be, part of their risk control program that they're putting a lot of money in to keep their deductible losses down. And so as far as the ERM type situations, a lot of times we're helping just from an analytical perspective of to say, hey, if we make some type of change to our insurance program structure because we think there's a strategy that could be more efficient or that could be better than what we're doing right now, a lot of times we'll try to help them with information related to the analytical considerations for that. So if they say, hey, I want to change my deductible, we've only been retaining $100,000 per claim, but we actually have this fantastic loss control program that we're implementing. We think we should change that from $100,000 that we retain to $1 million per claim that we retain. And so we can give them some analytics to say, hey, we think this is how much that additional $900,000 of losses per claim is going to cost you. So if you can implement that loss control program and you can retain that additional amount of loss and you're still making a great financial decision, we want to provide them the analytics to where they can make that decision for themselves. Is that worth doing? Does that make sense or not? So we help in those ways just from a very analytical perspective.
Thanks, Jason. And to all three of you, that was very valuable, but especially that piece on total cost of risk. The elephant in the room is as you navigate this conversation increasingly towards the boardroom and the boardroom role and risk oversight, it really comes to a different dimension of understanding, instead of criticizing what's the cost of insurance on the balance sheet, how do you understand the overall impact of risk management and how implementing ERM can be extremely valuable tool to manage your risk overall. So thank you all, and Sharak for the invitation from ORIMS.
Definitely. Okay. I know we're a little late on time, but thank you so much for joining us today. Thank you to all the panelists, Joy, Jason, and Chris. Yes, I see you. And over to you, Tandika.
Sure. Thank you so much, Chirag. I truly appreciate it. I do see there's another question, so I'm thinking I'll wrap up this session, and if any of the panelists have extra time to stay on, then please feel free to stay on and we can chat with Ali and anyone else that has any additional questions. So as mentioned, we do host these sessions on a monthly basis during the spring semester. So our next session is going to be Tuesday, April 10th. It'll be from 1 to 2 p.m. Eastern. Our presenting company will be Travelers, and our guest speaker is going to tell us exactly what to do within the first 6 months on the job. So thank you so much to everyone for being here today. As I mentioned, we are already over time, so if anyone needs to hop off, we completely understand. If anybody has time to stay and chat a little bit more and answer questions, then please do stay. Ali, go ahead.
Awesome. Thank you for this opportunity staying on this call. I'm a huge sports fan, so anything from the college level to the pros, it'd be basketball, soccer, football, baseball, hockey. I just want to get your perspective or your experience with handling the sports industry? Have you provided any services for clients or even the players with this growing environment of NIL, right? That's why we hear NIL, we hear just transfer portal, we hear coaches maybe leaving their jobs because they can't handle it, or is it a whole different perspective from what they kind of were used to? And especially these sport teams, right? They all have data teams. They all have a group or consultants that they kind of influence their draft or their salaries and all this sort of things. So I just want to ask, have you guys provided any services to them? I know this information isn't public usually, right? It's usually private. It's usually not shared with the internet. So I just wanted to get this opportunity to ask, what's your experience with that or any trends that you guys see in this environment? So thank you guys.
I'll jump in. I don't personally have any in that space, but Ali, as I said earlier, there's something for everybody. There's a place for everybody. And so, absolutely, we have a colleague who's another member of the Society of Risk Management Consultants who has a big client in Tampa, and he's been involved in their arena, their stadium downtown. So the property insurance for that, and they had a big claim after a hurricane came through. They had a lot of damage, so he's been involved in helping them with that specifically. I do have a personal friend of mine that I know who is a risk manager. He's not a client, but he's a risk manager for a sports team, and they had bought, or so, not a sports team. He was a risk manager for the NCAA, and they had been buying event cancellation insurance for a long time at his recommendation, and it was pretty expensive, and he took a lot of heat for that. And then guess what happened in 2020? That dude was a rock star because that paid out massive dividends from the investment that they had been making in buying event cancellation insurance. So yeah, I know a law firm on the West Coast that specializes in sports stuff and amusement park stuff as well. So yeah, there's definitely space for that.
Yeah. And if I recall correctly, there was a tennis tournament. Chris, maybe, or Jason, do you along the same lines that chose not to buy the event cancellation, and they were devastated. The payoff, the premium relative to what the policy would have paid, it was like a no-brainer. But for whatever reason, they didn't do that. I don't have any personal experience in the pro or college sports arena, but it's out there. You can develop your own. I mean, that is the great thing about being a consultant. Your passion and enthusiasm for an idea that you can back up, somebody's going to want that. And if you don't see it out there, if it's not as prevalent, or there's just a handful, that's a great niche to consider going into, if that's your passion.
Yeah, and I'd be happy to chime in from the Sigma perspective. So since I've been in with Sigma, we have had a couple times ideas or things come up related to insurance and sports. Someone who is trying to develop kind of like a loss cost model to determine rates to apply to different kind of sports athletes. And there have been some neat things, but it's never quite taken off or been like the perfect thing and really actually worked out. So I don't know if that's just because there's been so few that, yeah, I mean, there's lots of people that have lots of ideas and they don't always work out. And so when you only see a couple, it's not a surprise that maybe none of them kind of took off. But it's definitely interesting to us, especially from a analytical perspective. And we've actually done not actual, work projects, but we've done kind of presentations related to some sports related things. We had a couple of years ago someone do a baseball study, and they presented at one or two conferences. Last year, I have a broker who I share some clients with, who was having they put on like an annual kind of speaking event for some of their clients, and they had asked me to speak at it. And it was last year during the March Madness tournament. So I ended up doing a presentation on statistics around the different seeds and how well they do in the March Madness and how to make a perfect March Madness bracket from an actuarial perspective. And so it was pretty neat. And it was just kind of cool just looking at the statistics of, how far do different teams advance pending their I guess like, seed and things like that. So we kind of do it for fun, but nothing has exactly materialized as far as, real real, concrete projects related to the sports industry for us.
Yeah, with the fantasy football in the league that we have with our guys, it's crazy. I'm a numbers guy and I try, the rankings and all that, try to go through all that, look at the betting lines and all that kind of stuff. But some guys just, I guess they get lucky, right? Or
Well,
they get they get Derrick
yeah,
Henry. So
yeah.
and I can't do that. But
Well,
yeah,
and
thank you.
it was funny. I was gonna say, I mean, there's the thing with the data and the analytics part of it is you can only make, such an informed decision. I mean, you can make a great decision based on some good data, and that might not work out for you. I mean, and it's not because your analysis was flawed. It's just there's a lot of variability in these things. So yeah, so I mean, it's I would say if you do better more often than you lose, then you're beating 95% of people out there. I mean, they definitely engineer these things such that, hey, what do we expect the value to be? Okay, now let's tilt that in our favor, and then that's what we're going to offer people. So the people who are doing the math, they are spending a lot of time on it, and they want to make sure that they're making a profit on it.
Awesome. Thank you, everyone. I appreciate it.
Fantastic. Thank you guys so much for your time again, Chris, Joy, Jason. We truly appreciate you being here with us for over an hour and spending your time with us. We truly appreciate it. And we hope that you found, for the students that are here, we hope that you found this session to be insightful and engaging. I certainly did. So yeah, with that, have a great rest of the day and we will catch you all next month.
And it was
Have
fun
a
too.
good
Thanks,
one.
everybody.
Thank you so
Oh,
much.
Thanks for
good.
inviting us.
Of
Thank you.
course.